Hello, welcome everybody. This is SF Live episode 138. As you can see, we want you to subscribe to our channel, of course, before we switch over to our friend Jordan Roy-Byrne. He is the Daily Gold. He's the publisher and editor of a newsletter and one of the best, probably, gold analysts in the space. And I really enjoy following him on Twitter and in his newsletter as well. So make sure to give him a follow at the Daily Gold on Twitter. Follow his YouTube channel. He puts out very educational videos, talks about gold volatility and much, much more. So make sure to follow him on YouTube as well. So really appreciate him joining us in a few short seconds. But as I said, this is an interactive format. Make sure to follow us on YouTube and Twitter as well. And to get your questions in for Jordan. And we are using hashtag AskTDG today, or use the YouTube chat for your questions. And we'll get to those at the end of our conversation with Jordan. And we're going to cover quite a few topics today. We're going to talk about gold volatility. Are we being greedy in gold? Are we just greedy as gold investors? Should we take it a bit more easy, or are we on the right track here? So I think that's it from my end. Let's switch over to Jordan. Let's talk to an expert, and let's make sure that we get Jordan on here. And Jordan, thanks for coming on the program on Expert Monday. Appreciate it. How are you?
Hey, I'm doing great, Kai. It's my pleasure to be on. I mean, you do such great work here. I love what you're doing, so it's a real pleasure to be on with you today.
Fantastic. Really appreciate it. Thanks for the comment there and the shout out there. Much appreciated. But let's dive right in. Okay. You know what? Let's go one back. You're the first. You're on the program for the first time. Introduce yourself real quick. I tried to, but I probably missed half. So why don't you tell us quickly about the Daily Gold and who is Jordan Roy-Byrne?
Okay, well, the Daily Gold, I have to say, it's a bit of a misnomer. The Weekly Gold is probably more accurate because I do pretty heavy weekly updates for subscribers. I also do flash updates. And so the Daily Gold, I mean, it's essentially what I do. I mean, I put out a lot of free, usually an article per week. I put out some videos. I post interviews like this. I also, so in the premium service, I should say, I'd say half of it is technical analysis and kind of macro technical stuff, looking at kind of general macro charts and where things are going, macro and big picture wise, where the capital flows are, that sort of thing. And then the other half is basically fundamentals on the stock companies that I'm investing in. So even though my background, I mean, my expertise is really technical analysis, and I got into that because I started investing in the late 90s in the tech bubble. And then, I was selling along the way, so I did well. But what hurt me is then on the way down, I was buying and I didn't know we were in a bear market. I didn't really know anything about charts. So after that, I learned, well, there has to be a way to time the market. Like there has to be a reason why stocks are moving a certain way. So I got heavily into technical analysis in the early 2000s, and I started, I understood commodities and where things were going, and I started investing in energy first because the junior companies there, the small companies, they make money, so it was easier for me to follow. But in the back of my head, I always knew I'd be getting into gold and silver at some point. And so I went in pretty heavy in 2005 and got really lucky. The timing was perfect. You get lucky. It happens sometimes. So, and since that point, I've been learning about just the companies and the business and all of those types of things. And so initially I was focused on junior producers and I didn't really know much about exploration. So in the last 3 to 5 years, I'd say I learned a lot more about exploration. So that's basically how the Daily Gold originated and where I am today.
I was going to say you had a lot of time to catch up on exploration stories the last 3 to 5 years because not much has happened really. So you had time to read up. But now it's a bit different. It feels like we have quite a bit of momentum in the precious metal space. We're not really sure where to put it though, like where to put that energy. It feels like there's a lot of pent up pressure in the space. It feels like. But we're not seeing it in the price movements yet, at least of precious metals. Silver has moved a little bit due to the silver squeeze movement. It got way more eyeballs and attention, but gold is still in a correction mode, right? And the question is let's dive right into the gold thematic here. Why is gold in a correction mode while everything else is running? Like, what's the reason for that?
Okay, that's a great question. Well, the reason for that, and I'll try and make this quick, is so last August we came to a point where it was clear, at least, and I like to look at the stocks a little bit more than the metals. And so the stocks, based on breadth indicators and those types of things, they were, I mean, this was apparent in July. They were starting to get really, really overbought. They were headed for a correction. So I saw the correction coming. I did not think it would be this deep. It's gone a little bit deeper than I thought. And the reason for that is, and you see this a lot coming off of a major market bottom or even a recession. I mean, we're still in one, but coming out of that, you see the policy that's favorable to gold. And usually what happens is you see gold moves first, then silver, then the rest of the commodities. So gold was doing well, and it was even doing well in 2019 because you had interest rates were going much lower. You have negative rates around the world. So gold was getting inflows based on kind of very rate cuts, negative yielding rates, all of that. So real interest rates were declining; they were going negative. So gold was doing well because of that. However, when people think, okay, the market's bottomed, inflation expectations are going to start to move higher, then that's better for commodities and also stock markets. So capital at some point along the way started to move out of bonds and gold and into these other areas. And so there's probably still some legs left to that trade, but that basically explains, even though in the very big picture, we're probably going to have inflation down the road and real rates are going to remain very negative. Big picture, things are still very bullish for gold. But zooming in, that's what's been happening. Capital has been moving away from bonds and gold because people are getting more optimistic. Inflation expectations are starting to rise. And look, if that continues, that will be very bullish for gold. But the initial movement away from kind of negativity, safety, bonds and gold, the capital initially moving away from that into these other areas, that's what's been happening in recent months. That's why gold is underperformed. And to be honest, it's really relative to these other areas, it is really kind of nosedived. It's performed a lot worse, relatively speaking, than I expected.
Tea here, and apologies.
No worries.
But so are we being greedy as gold investors now? Like, so my question is, like, you mentioned the run up in gold. We've seen actually good returns starting in 2019. You mentioned 2020, gold ran to over almost $2,100. Are we being too greedy now? Is that correction healthy, and do we want too much? Because we see Bitcoin rallying, and one theory actually in preparation of this interview is like gold had 5,000 years to rally to $2,100, right? Bitcoin is trying to catch up now as a currency as well, if you want to believe it's a currency. So do we see that happening right now? Bitcoin just catching up to gold?
Yeah, I mean, it's tough. I think, and I'm not an expert on Bitcoin and crypto. I would just say, based on how it's moving, it's kind of like half a currency and half a tech stock. So it's that's how I look at it. Um, but it almost seems to me, I know cult is a strong word, but like Bitcoin and it kind of seems like a cult. People are saying, well, it's, they're just looking at what's happened in the last couple of weeks or the last month, and they're saying it's a better store of value than gold. And I mean, whoa, hold on. I mean, this is something that's had numerous 50% corrections in recent years. I mean, that's not really a store of value. So I think I think it's highly speculative. I mean, it's gone vertical, and we in the gold market know that when something like that happens, it's very dangerous. And so I think Bitcoin, maybe in the coming years, it can go into a bubble, or I mean, go into a full blown mania like gold, but it's still, it, I look at it, it's only for, I would say, it's like a lottery ticket or insurance. That's how you have to look at it. Uh,
Nah, that's a good
anything,
point. I don't want to really dive into the Bitcoin thematic. My
fair,
thought
yeah,
was
fair
more
enough.
like, is Bitcoin just trying to catch up with gold as a currency because gold had like 5,000 years, and we are now at that certain level of valuation, right? While Bitcoin is just trying to make that up. So that's just a thought, right? Because it's only been around for, I don't know, how old is it?
Right.
12 years, 13 years, something like that. So it's still fairly young, right? So that was one of the. So, but what kind of environment are we in? Like, how are we not afraid of inflation right now? And why is that not reflected in the gold price, or is it already reflected in it, and we're just way too high, and we're just stupid enough, or not clever enough to see it? And you're the technical analyst, right? So that's why it's like I'm
Yeah.
asking these pointed questions to trigger you a little bit.
No, those are great questions, and it just gets back to the way what I said in my last answer, how money is moving, and that we kind of the market and capital flows were so focused on zero rates and negative yielding rates, and so all this money came into those areas, and now that people who bought gold because of that, they're saying, well, now there's inflation, we think the economy is going to rebound and grow. So I have to buy commodities instead of gold. So no, I think inflation is definitely, I mean, a worry. It will be a bigger worry, and it's something I'm trying to look at with my research. I'm trying to figure out, okay, what if this trend continues where people have some optimism and they think, inflation expectations are going up and that sort of thing. If that continues, when is that going to be bullish again for gold? And unfortunately, I don't have a great answer for that right now. You I need to spend more time looking at history because there's nothing obvious that jumps out at me. But that's why you have to follow the market in the price action. And so that's one thing. I look at charts and fundamentals, but charts can lead. The market discounts things ahead of time. Like on the day we're talking, I mean, we could have hit an important bottom today. I'm not predicting that. I'm just saying, like, it's in the realm of possibility that this is like that we hit a major bottom last week or today. Um, so that's, I mean, I'm always looking at both technicals and fundamentals.
I think I read somewhere that you've been saying that the market needs to be scared a bit to sort of move the funds away again from the pressure from the base metals, and also bond yields and stuff need to sort of fit in there, right? And I've been saying that as well. Like, we need to scare the 401k money that something can happen now with almost $2 trillion coming into the market as part of uh, the stimulus package, right? There is no need to move your money out of the main markets, for example, because stocks will only go up, right? So we need to, like, and it sounds bad, like I don't want to scare anybody, but we need one of those like black swan events that actually scares main general investors to go look back into our commodity space. Is that correct? And that assumption, like, and what could that be?
Correct. I think you're absolutely correct. I mean, if you look at the gold to S&P 500 ratio, and also you can look at GDX to the S&P 500, these are still trading below their 7 or 8 year bases. So they have these big bullish bottoming formations. And so eventually, when gold makes that next move higher, it has to happen in tandem with gold and GDX really outperforming the stock market. So that verifies what you're saying. Now, as far as what could it be, I mean, it's hard. It's really hard to say. I mean, the stock market is so overheated that I think in the next 12 months, I think it has to have at least a 15 or 20% correction. Maybe it will have a bear market, but I think at least a sharp correction is probable. And so I think, and as far as what could trigger that, it's really hard to say. I mean, it could be any small thing, and then people get really worried and start to sell. I mean, it could be inflation expectations starting to get too hot. It could be, um, yeah, that happens, and we see yields run a little bit too hot, and then the Fed talks about yield curve control. So it's hard to. I mean, it could be any single thing out of like 4 or 5 different things. But like I said before, it's not clear to me which of those things it will be. But we just have to worry about the market and focus on how gold and the gold stocks are moving. They will discount it. They're going to bottom and move up ahead of time and discount that before we know exactly what it will be.
Yeah. Is there like one indicator, as you said, inflation numbers, inflation expectations? Is like one indicator when that comes out at 2 o'clock or so in the afternoon? Is that okay? I'm going to go buy gold. I'm going to go sell gold. Is there one indicator that you follow, or that's a major influence in your technical analysis?
As far as news, no. I mean, I look at so many different things. Like I said, I look at how's gold performing against the S&P. How are the stocks? I mean, GDX. How is GDX performing against gold? How is the GDX advanced decline line performing? I look at breadth indicators, how oversold or overbought the stocks are. So I look at that action and kind of pair it with what I see in terms of the macro fundamentals for the sector. And so I think we're kind of and someone asked me this question in an email, and I mean, it's a great question. Are we going to, from this point, are we going to see inflation really take off, or are we going to see another wave of people get concerned again, bonds get bought aggressively, and then gold rebounds because rates go lower temporarily because it's been selling off based on yields going the other way and bonds going down. So that's really the question now, and it's great to come on interviews and give really definitive answers, but I just can't say. I mean, it's not clear to me exactly, we're in a correction. It could continue for a little bit longer, or there's a chance that it just ended uh, as we're talking today based on how the market's performing. But I just don't know. There's not enough evidence for me to say yet.
I was gonna follow up because you mentioned that earlier in our conversation that you might think that gold have bottomed, and we are in that range bound correction phase. Like we're not really breaking out between 1775, it seems like, but we're not really breaking out to the upside either. What is it, 1850? I'm not a technical analyst, so you might have to correct me there. But what made you actually say that this might be the bottom? Is there something you saw in your analysis that this could be it?
Well, we are really oversold. If you look at gold's bouncing, or last week, at the end of last week, it bounced off the 300-day moving average. And if you go back and you look at the 70s and the 2000s, like the majority of corrections ended at the 300-day moving average. So it is possible, although personally, my guess would be like I still think we're going to go a little bit lower, but there is enough enough evidence for me to believe that it's possible that we hit a bottom on Friday, or you could say today. The move on the stocks is pretty strong. We'll have to see how that follows through, and how precious metals are performing against the stock market. But I mean, it could just be a bounce and then we roll over again and go to a lower level. And that's how I look at I mean, unless there's like really strong evidence, I'm not gonna come on here and say, oh, we bottomed, or that stuff doesn't help people make money. I'm just trying to point out what you can expect, which is I think we're probably going to go lower, but there is a possibility that we have hit the bottom.
Interesting comment. You think it's going to go lower, and like, what does your like technical analysis say? Like, what trend or what price level do we need to break to see lower prices, and where's that next level then? And I don't want to scare anybody, but let's be realistic, right?
Yeah, realistic. Well, actually, 1690. And I since the correction started, I said that's the realistic worst case scenario, is we could test 1690. And 1690 is, if you look at the chart, it's a level where if you go back to 2020, the first 6 or 7 months of the year, it was kind of resistance right at the beginning of COVID, and then in the spring, after we had a great rally, we consolidated. It was support, and also it's the 38%. It's a minimum Fibonacci retracement from the 2016 bottom. So if we're going to correct that entire move, the minimum would be 1690. And also, when I look at the quarterly chart, for example, which, I mean, few people look at that, but 1690, 1670, there's some support in that area on the quarterly chart. So I mean, if this is not the low and we're going to go lower, that's something I'm targeting. There's also another thing. There's the 400-day moving average, and then there's the lower 200-day Bollinger Band, which those things came really close to providing support in 2004. And based on how gold is looking, I've kind of been using that 2004 comparison. So that's with gold. As far as the stocks, I mean, we could see GDX come down to 30, GDXJ come down to 42. I think those are kind of potential, I don't want to say worst case scenarios, but those are possible levels that we could come to. But at the same time, like GDXJ, for the 400-day moving average, which has been really important over the last 10 years, that comes into play around 45. So like I said, it's possible. I mean, there is enough evidence that we could be moving up from the bottom right now.
I was going to say, that was my next question. So we talked about the negative side, but to confirm that potential breakout, what kind of price would we have to see maybe by the end of the week? Because I know Friday close is quite important. It's the end of the month, right? What are we looking at? What do we need to see? What needs to be priced in? Is it just the 1800 level, or is there like 1823 that we need to stay above?
Honestly, it's really hard to say. I don't have a good answer for that. Normally I could say, but that's just where I'm at. I don't know if we can confirm or prove that there's a bottom this week. Maybe after a couple weeks, but I don't see a certain level. Now we are coming to the end of the month, so the monthly close, that is something I'll look at. But yeah, not to belabor the point, but I just don't know yet. But the monthly close it's possible that could give us a little more evidence.
Yeah, like it sounds like you're a little more clear position to the downside of the gold market right now. Not to be negative or anything, but like, how are you playing that scenario right now, and what would you like suggest to potential investors in the gold market or precious metals right now?
Well, here's where my analysis is going to sound different. Like we are getting closer to a bottom. Like this is a time, like I said a lot in the summer and early fall, like, look, there's only a few things you could do. You could buy or you could do nothing, basically. Or or you could trim and take profits. That we're around the time you should be buying, honestly. So if you look at the stocks you want to buy, and there's some that maybe there's some who look vulnerable who may have to correct for a couple more months, but there's some that might be there's some number one that might have already bottomed, and number two that could look like they might bottom in the next week or two, or maybe, like I said, maybe they bottom today. That's a possibility. So you have to look at the individual companies and also the value. So I have the macro technical stuff that we're discussing. That's an overarching thing, but you gotta pick the company and also look at its chart and its business, its value, and because look, some of those they might be a buy right now, and some of those maybe you have to wait a little bit longer. So I just don't definitively say, okay, well the sector's bottom, let's just start buying stuff. I tried to do that a couple years ago, and it doesn't work as well, honestly. So I like to focus more on the companies, and and I have usually I use like a 20% mental stop loss. And that's the problem that people have is they try and make too many decisions. Let's keep it simple. Have a mental stop loss. If you buy, let the market help you figure it out. I mean, if we've bottomed and you made these buys, then you're going to be holding them for a long time. Maybe you'll get stopped out and have to, buy again at a lower price, but that's not the end of the world.
No, not necessarily. Let's switch gears a little bit. We talked gold the whole time, and I know your newsletter is called the Daily Gold, but I got to ask your opinion on silver. Obviously, a lot of eyeballs on the silver price thanks to the silver squeeze movement, and lots of people now buying the PSLV to sort of physically squeeze the silver market. What's your view on the silver market right now? Do you have an opinion on that?
I do. The silver market. Okay, so what's interesting is all the reasons that gold has been selling off. And I think last comment on gold, I think part of the reason why we've seen a little bit more of a sell-off than maybe many of us anticipated is because gold was able to rally to almost 2100. Like if it peaked at 1900, I think the sell-off would be more mild. But all of those reasons we discussed, those reasons are that why money's moving out of gold, gold's struggling. That 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 stuff has been performing like it hasn't really been performing as well as commodities. I mean, you have gold's been performing poorly recently, commodities really well, and then silver's kind of in the middle. But honestly, I would say it's kind of a little bit closer to gold. And if you look at the early 2000s when there were some not numerous, but a couple different consolidations in there, and during those consolidations, silver actually outperformed gold during some of those. So I see what we're seeing in silver has happened before. I don't think the squeeze, like I may be wrong, but I don't think it has really anything to do with what's going on. Maybe a little bit. Um, but silver, it's in a interesting position. I don't think it's going to be able to break out. And since we had that big move down after the squeeze pop, the silver stocks have been lagging silver, which is not a good sign. So I wouldn't. I'm kind of on the fence with silver, and I'm not that keen on it right now. I don't think it's going to break above 30 and make a run. I think it's more likely to come back to the bottom of its range. But and just another thing, getting back to what you said about being greedy, silver went from $11 to $30 in like what was it, 4 months
It
or
feels
something
like
like that.
shorter,
Like
yeah.
yeah, I mean, this is not something that's going to go to $50 this year or even next year. Like it's going to need time to digest and correct that move.
No, fair enough. And I was actually going to put you as sort of the final question of our conversation, put you a bit in the hot seat there, and ask you just final like price targets for gold and silver for the end of the year. Do you have a number that you feel comfortable with?
I really don't, to be honest. I mean, looking at gold, as you can tell, I'm a lot more keen on gold. I mean, I'm looking at history and I'm looking at, I like to look at history and then kind of use analogs. And so I'm looking at a lot of different things. And so that can, I'm just looking at my notes. I mean, we could rally back to the high in gold. I think the latest I would have that is probably like the middle of next year. Or we could get back there as early as the very end of this year, the beginning of next year. So I would kind of lean to the middle of that. So I think, we could be a little bit higher than where we are at the end of the year. That'd probably be my expectation for gold. Silver, honestly, I'm not sure because it really depends. Like if we're going to have, if the catalyst for precious metals is going to be more on the inflation side, silver is going to do better than gold and outperform. However, if we get a 15 or 20% sharp correction in the stock market, or even worse than that, you're going to see gold really outperform silver, and so silver would be lower in that scenario. But last thing I'll say is big picture, I am really bullish on gold and silver. I just think it needs time. And so looking at gold, this cup and handle pattern, I mean, this projects to 3,000. So I think 2 or 3 years from now, I mean, I think we're going to be trading above 3,000. So I am very bullish, but this year I think could be a little bit more difficult, kind of a grind, testing our
Repeat
patience.
that for me. $3,000 gold when?
3,000. One analog has that at the in the first quarter of 2023, so in about 2 years. But I'll just give it 2 to 3
I was
years
going to
just
say
to
I'll take that.
get
That's
yeah, just to give because it's the setup, and I do want to because people they'll say, oh well, he sounds bearish, but I do want to make this clear. I mean, the pattern that we have in gold, this huge cup, and we're building the handle part of it now of a cup and handle pattern. This is a super bullish pattern, and gold was able to rally a little bit above the beginning of the cup. So in a textbook cup and handle, gold would have stopped around 1900, but it was able to actually rally above that. I mean, 7 or 8%, whatever it was. So that's an indication that there's even more strength to the pattern. So this is a very bullish, big picture technical pattern that gold is trading in. When it moves, it's going to move aggressively and break out. The bad news is I don't see that move starting until, the very end of this move or early next year.
That's not too bad. Come on, it's $1,800 gold. As you said, you look at the junior producers and producers. We should be happy with the current price level, right? So being too greedy, let's digest 1850 or 1820 where we're at today, and see what the producers are coming out with numbers. Because so far the free cash flow numbers I've seen are phenomenal from some of the big producers. Extra special dividends from Barrick, increased dividend. I think 3.9% dividend yield now from Newmont. That's what we want to see. And of course, then M&A in the space. And as you said, you follow more the stocks than the gold price itself. I think we're on the right track.
Yeah, I mean, I think this is a correction, consolidation, digestion of the huge moves from last year. I mean, it just takes time, and we haven't done anything that's been too nasty of a correction. And this is healthy. I mean, a lot of the hot money, probably all the hot money has left the space, honestly. I mean, there might be a little bit more money that comes out, which might be a little unnerving, but I mean, this is setting up for a significant low, and eventually we're going to launch much higher. But again, I don't think it's going to be this year.
Nothing wrong with that. I don't mind. As I said, so Jordan, really appreciate your input and your comments. This was fantastic insights. Really appreciate you coming on SF Live here, episode 138 today. Thanks for joining us.
Oh, it's my pleasure. Thanks for having me,
Everybody
Kai.
else, thanks for watching. Thanks for joining us here on SF Live. Really appreciate it. Make sure to follow us on YouTube, follow us on Twitter, hit that subscribe button, and also hit that little bell icon. That way you get notified when we go live. We do all our interviews live. That's really important to us. You'll hear it directly from the company CEOs, but also from our analysts. What do they think? What do they see? That way you have a bit of an advantage and don't have to wait till middle of the night to watch a replay. Really appreciate it, Jordan, and we'll have to get you back on soon.
Thank you.